August 14th, 2024. This is the S&P 500 E-futures mini on the 2000 tick chart using NinjaTrader 8. This is what the chart looked like today at 5:30 Pacific Standard, where you see this gigantic impulse spike in flush. This was the core CPI numbers that came out. Afterwards, things steadied, and it was a kind of a slow day, no trade day. I wasn't able to find very many setups as well. So hopefully this video goes a lot faster. Even though there was this big gigantic leg up, there was a potential trade here, but I wasn't sure. I call it a hunch trade, and I'll explain it when I get there, because it essentially made two clean measured legs up. It also could have fit within this bigger leg right here. There's a lower high right here that engulfed the previous, but I'll get to it when I get to it. So there wasn't too many trades that I could find, too many setups, and a lot of the times there was a potential setup. The signal bar was the wrong color, or it was on the wrong side of the EMA. And overall, I would say you could probably call today, other than this spike here, maybe just kind of a range day, but it's not even a clean range. It's kind of this sell-off, rapid fire up, another sell-off, and then choppy. So I'm not sure what you would call this, but it's not quite a range day and it's not trending either. So it's kind of a mixed trading day. So I'll just go through the few setups that I did see. So this is a pre-market. This is a 22-point bar. So you definitely don't want to be trading or get caught in this, because in the life of this bar, you can't just assume that it just went from one side to the other. During the 2000 tick life of this bar, it had moved up and down, fluctuated quite a bit. So unless you kept a 23-point stop loss, which is gigantic, you very likely might have gotten stopped out on this. So in the pre-market, it looks like it's just ranging. Even before the announcement, things look like they were ranging. An impulse flashed, hits the pre-market high, pre-market low. Doesn't really seem to do anything. Then on the open, it kind of rallies a little bit, hits the resistance of the pre-market high, sells off on what I think is this green down channel, no clean setup, consolidates, and then sells off some more. The first kind of area that I thought might have had a setup was what I first call an almost trade. This channel doesn't exist yet, but you do have a new low. You have a first entry short, pull back. You have a second entry short here. Second entry short, the signal bar, nothing right here tells me to go short just yet, because the signal bar is inside bar, and I could be potentially bouncing off the bottom of this orange up channel. So it's unclear what the next move of this is going to be. I call this an almost trade, but if you're more aggressive, thinking there's more of a bearish downtrend, you might have taken this, but because the risk is a little low, it's only 6 ticks compared to previous. Then it flushes down, so you do get a confirmed second entry short, comes back up, and here you get a lower high and a failed second entry long. Now the lower high hasn't confirmed yet, and the failed second entry long hasn't confirmed yet. You only have a confirmed second entry long, but you don't know about the failure. So I was thinking this might have been a possible trade, but I just didn't really like the look of it yet. What I needed the close to match the lows here if I was going to take something like this where it didn't break below. Or I just needed a cleaner setup, because this orange up channel just broke first time. It could push once. The next couple candles could try to test this high, because I'm not convinced that this little spike over is an overshoot. So I can make a case for a buy and also a sell. But I wasn't really sure. Then when you see this bar form, then you clearly know that it was a failed second entry long, lower high. Fortunately, I wasn't able to ride that. The prices move on this yellow down channel. During this formation, I was drawing all kinds of lines to try to capture this. Nothing quite fit right, except for maybe this yellow down channel, which gives me a little more caution, because you don't account for a few of the other things. And even when I did find this channel, it still doesn't fit quite right. So taking any trade that you think is a clean, high probability trade is iffy. So out of this pre-market highs and lows, you have a failed breakout here. Technically, you have a new low, first entry short, second entry short. You have a second entry short failure, but I don't really like this second entry short failure, because the second entry short's below the EMA. Failure usually on the second entry short, you want it above the EMA. It's a little unclear. If I trusted this yellow down channel, I am potentially pushing on the highs of it. So it could be a failed breakout and continue back down. So it's a little ambiguous. This is a hunch trade that I saw, but I didn't want to act on it because I couldn't justify and couldn't clearly define or explain to someone else looking at this, why it's a good trade. It's more like a hunch. You have a new high here, first entry long pullback. You have a second entry long here. In real time, I was thinking the strength of this green up channel is strong enough to at least see a push up for one tick. The thing that stopped me was I don't like the color of this candle. I need it to be green because it does show that there is potential sellers still in play that could push it down. So it's a hunch trade because I think, barring everything else being equal, I felt like it was going to keep going up based upon, well, not enough excuse me, not enough data to justify that, but it looked like it would have worked. Prices then continue moving down. You technically have a new high here. You have a first entry long. You get your second entry long right around here, but this is a bad signal bar, and the follow-up isn't any better. You don't get a higher low till you get to about here, but then this candle is your higher low. It doesn't really give you that much confidence either, because you do have a break of this orange up channel and already tested the high. So you're thinking prices may continue back down since the bias has been bearish all along. Then it pushes up. It looks like it's following on this green up channel. It creates this one leg, and I'm thinking there is potential measured move here because it made one leg up, consolidates, and it's probably starting a second leg. So that's where I drew this guy to here and placed this guy here. But even on this way up, there was no clear or clean way to enter safely, in my opinion. You do have a new low here. It's a first entry short pullback, second entry short, potential second entry short failure, which is on the right side. But I didn't like that it was potentially hitting the top where this resistance was because I could be in a trading range. So I didn't mark it. I saw it, but I left it alone. Prices move up. It makes the measured move. So this is where the hunch trade comes in. Clearly, since the open is moving sideways, it broke out and made one leg up, pull back, a potential second leg. But you could also see it as one big clean leg up. The EMA has been following up very closely, and you do have a lower high here. The thing I liked about this lower high was it moved one tick above, engulfed the previous candle. This guy, not only did it engulf it, its close was below the low of this candle. The thing that I really wanted in order to take this trade and make it not a hunch trade was I needed this guy to clearly break below the EMA because it's stopping short. In real time, you see this. You could argue pretty effectively that this green up channel is still in play. This break could push up and test the high. But something about the setup just told me, like, I think it's probably going to go short, but not enough to take a trade. Again, this needs to break below the EMA and close nicely bearish. Unfortunately, it doesn't. And then you can see the next subsequent candles, kind of has this big flush down. You could have argued that maybe you take the trade here, but the way I saw it is if it didn't form on this candle or create a clean setup on this green candle, below the EMA, then I was just kind of abandoning it because this is still very close to the EMA, although it's below that it could still bounce up. So I haven't seen these enough to get a good feel of what exactly is going to happen. And in this case, it was a big flush down. I do see another possible trade here. It's orange down channel, break, test a new low. So I'm thinking maybe the down channel has played out, but there's a possibility that this could be a little bit wider like this. And so it looks like it's one leg up, pull back, a second leg up. I saw this and I thought, is there a potential second entry short trade here? It's a break of this orange down channel, made one attempt down, push back, second attempt down. And the second attempt down, this is the signal bar. It's a really good signal bar, rejection off the EMA. And the follow-up candle looked pretty nice. Now it actually opened here, pushed all the way up, and then came down. So if I was going to enter, I'd probably enter at the lows of this candle. And as you can see, it looks like it's just exactly 4 ticks. So if I took it at 54.65.25, it's here 54.64.25. So that's exactly 4 ticks. It's debatable whether you would have gotten out. I think it's a trade I potentially may have taken, but after the bounce here, then I found this red up channel, and even then, this 2 legs up wasn't that clean, and I like that this candle engulfed this guy. And I think it was just fortunate that I didn't take this trade because I can't for certain say that I would have gotten out with a profit. It could have been a losing trade. Then prices continue moving. It breaks this yellow orange down channel and it tests the new low, and now it looks like it's reversing. It's just very, very sideways right now. And when it gets into this range, you have a second entry long here. It's like a first entry long, second entry long, but you do have a break of this yellow, test the new high, one attempt down. I was thinking there's a potential second attempt down, watching this in real time when you see this. It could very clearly just move down again, but you could also argue that maybe the downtrend has played out, but then I'm not 100% sure, so you could make an argument both ways. So it was better for me just to sit on hands. Prices then continue chopping. It just moves sideways. There's a new high, first entry long, second entry long is a bad signal bar to go long on. You also had a new low here, first entry short, second entry short, bad signal bar, or you can see this as a visual first entry short, pull back, potential second entry short. But again, this is a bad signal bar. At this point, I'm thinking I'm in a trading range, but then prices move up in a very, very tight consolidated fashion up this orange up channel, has an overshoot, first attempt up, then you don't get a second attempt down. So you could argue for a lower high here, but this is a green bar and it just doesn't look very clean. And the subsequent follow-up bar, although it pushed below, you don't have enough room before you get to the EMA now, because you have an overshoot here. You're thinking maybe there's a possibility of a corresponding overshoot here, but it was just confusing. Then prices, it gets a little noisy here, then it pushes up, and it kind of goes into the close. No real setups that I could find here. Plus, it's in the last 30 minutes, which gets gets a little bit harder to trust. And I'm knowing that I didn't take a trade all day, it is better to just end the day with no trades as opposed to getting a red trade here and then getting frustrated with that quick entry. There was a new low here, first entry short, second entry short here. It's a doji though. And again, this is in the last 10 minutes. So it's getting, when you see this and you know there's only 10 minutes left, and for me, knowing that I didn't take a trade all day, it's better to just leave it alone and just wrap it up, which is what I did. So it's already been 2 days with no trades. I know this will likely, uh, I have to be very careful on things like this where I take a couple days of no trades, because I know the third day, fourth day, I might be more prone to invent setups, because I know I've done it in the past where I have like two or three no trade days in a row, and then all of a sudden the next day I take a trade and it's a loss. It's because I think I get the feeling that I need to take a trade as opposed to waiting for the right setup. So I had to keep that in the top of my mind tomorrow, just to know that it could be a third no trade day. It's better taking no trades than walking away red. And yeah, the volatility and volume were kind of low today. So hopefully that was helpful.